And the Reserve Bank of India has come out with its new policy. The RBI has decided to keep the repurchase rate the same. No relief in EMIs or installments. RBI has maintained a neutral stance.
Good afternoon, everyone. The MPC reviewed current and evolving macroeconomic and financial conditions and decided to keep the policy rate unchanged at 6% while maintaining a neutral monetary policy stance. This was by a majority of 5-1. The MPC reiterated its commitment to keep headline inflation close to 4%. We expressed concern about the loss of momentum of growth in the early months of 2017-18, especially the persisting weakness in manufacturing. The MPC noted that the implementation of the GST appears to have rendered short-term prospects uncertain, possibly delaying the revival of investment activity, which is already hampered by stressed balance sheets of banks and corporations. On a positive note, however, core industries posted a robust growth of 4.9% in August. The manufacturing PMI moved into expansion zone in August and September. The teething problems linked to the GST may get resolved relatively soon, allowing growth to accelerate in the second half of 2017-18. The outlook for agriculture and allied activities is favorable, and services sector performance has improved markedly, with many indicators pointing to further strengthening in the months ahead. Over the rest of the year, household consumption demand may get a boost from upward salary and allowances revisions by state governments for their civil servants. On the downside, a faster than expected rise in input costs and lack of pricing power may put pressure on corporate margins, thereby affecting value added by industry. Taking into account these factors, the projection of real GVA growth for 2017-18 has been revised down to 6.7% from the August 2017 projection of 7.3%, with the risks evenly balanced. On the other hand, the MPC observed that CPI inflation has risen by around 2 percentage points since our last meeting.
And I'm joined on this story for more to understand better the new policy of the Reserve Bank of India by our business correspondent Sumit Chaturvedi. Sumit, what's your take on this?
Well, first of all, there is no surprise at all in this policy. It was expected that the overall rates will not be tinkered with, and that's exactly what has happened today. So no change in main policy rates. There is no interest rate cuts. In a nutshell, it will mean that there is no change in the EMIs, what consumers pay for different things, even houses and consumer durables. So no change in their EMIs, but that is on the expected lines. What RBI, Reserve Bank of India, India's central bank, has also maintained is a neutral stand going forward. RBI has also admitted that there were teething problems connected to GST, introduction of goods and services tax, which happened in July this year, but they'll be solved soon, and going forward, the overall rate of economy could improve, the growth rate could improve going forward. Though the decision has been based on inflation, which has risen by 2% since the last, we can say in the last one quarter, and based on that, the decision has been taken that there is no change in overall, we can say that interest rates scenario as far as RBI is concerned, and that was announced today.
And Sumit, this announcement comes at a moment where the Indian economy is a bit, I would say, suffering because of the demonetization and the GST. Do you think the government was expecting a more aggressive monetary policy, perhaps?
Daniele, it looks like government is waiting for the festival season, the last quarter, to get over and to see whether the economy is back on track. So if the demand comes back in the last quarter, which has already started October, November, December, if the demand is back, then there is no need for going for any rate cut. But if the demand has not come back in this last quarter, festival season, then surely they would go for a rate cut. That it appears that they have followed this strategy in current quarter. So nothing much big was expected that rate cut will come, and rate cut has not come. But yes, it can likely come in the next quarter if the demand in the coming festival season doesn't come back.